All right, what's going on, everybody? So this week we're back again breaking down another fire trade called in the Signature Group. Now, right before we get into it, I want to explain how my goal of mine is that I'm going to make every video less than 3 minutes long. Now, you're probably asking why 3 minutes, but the reason for 3 minutes is because it took me 3.5 years or 3 years to be consistently profitable in the markets. So my goal is to deliver all that knowledge that took me 3 years to acquire and give it to you in under 3 minutes in a YouTube video. Also, one more thing before we start. So we're almost at 10K subs and I want to do something special for you guys when we reach that. So when we reach 10K subs on this YouTube channel, I'm going to be giving away 10 special gifts for 10 of you guys. So stay tuned for that. All right, so let's get right into it. So the first thing we're going to do, guys, if we're trading on Wednesday, we got to mark the high and low of day, which this is done on the M5 time frame. And if you guys want the exact rules for this, check out the YouTube videos that I have called how to mark the highs and lows of days correctly. This will give you all the details on how to mark this, but it's pretty much marking it on the M5 time frame, and it has to be between Frankfurt to New York session if you're marking the highs and lows of days. And if you're marking the previous highs and previous lows of days, it's going to be 2 previous trading days. So if we're trading on Wednesday, the 2 previous trading days is going to be from Monday. So we got our previous low of day right here, this area right here. And then now we're going to mark our previous high of day right here. So we mark our previous high of day. And then now we got to do a top-down analysis and see where we are heading in the market, right? So on the market's always finding supply or demand. So you just got to identify if the market's pushing to find demand or if it's pushing to find supply. And then when it reaches these areas, if it breaks past it or respects it, you look for the next area. So for example, we have this area of demand that this is the next target on the weekly for price, right? We have this weekly demand right here, which this is not a strong area of demand. And I say it's not a strong area because the push started from here, but this is the most relevant one, this one right here. Then we go to the daily. We have this daily in confluence with the weekly. So we mark it like this, daily and weekly in confluence. Now we got to go ahead and go one lower time frame, H4, find our next target on H4. So notice daily, weekly on this sweet spot right here. H4 demand is right here in this area. So we mark it like that, H4 demand. And then now we got to work our way down into the H1. So notice how this is the main targets we have for price, but when we come to sit down to trade, the actual first target that I'm going to shoot for is going to be this void, to fill this void right here. And with this being the first target, this H1 demand right here that created the push. So this is the importance of doing the top-down analysis, because on a higher time frame, we could identify that price is going to make its way down here. But first, price has to break past this area. So this is the first target for price. We have a nice void to fill. And then this is where the sauce comes in, guys. So pay attention, because there is a lot of value about to be dropped right now. So me automatically with this void to be filled right here, I'm looking to fill this void, and this is actually going to be my first target, this M15 demand right here. So this M15 demand that created the push to the upside is my first target. Down to H1, we break past that, then we shoot for the next targets all the way down here. So keeping that in mind, that this is our first targets right here. The one thing that I noticed on today, because every day when you sit down, it's not going to be crystal clear. Some days you have to let price action play out for you to actually see where the market's going. Some days you sit down and you're going to automatically see, oh crap, this is like, I just placed my sell limit, buy limit, and I walk away. But on a day like today is a little bit different. A day like today, you have to actually analyze the market and watch it play out candle by candle. Why do I say this? Because what did we have here? We have an area of demand right here that was created in London that created this push to the upside. So we have an area of demand in confluence with the previous high of day. And then we also have an area of supply right here, which is the pre-New York. So this is our previous session setting us up, M15 in confluence with the high of day. We have M15, M5 supply in confluence. So automatically, if you guys follow me on Instagram, you guys saw how I said I was looking for price to break past this area to sell. But if price did not break past this area, I was not going to sell from here. Now, if this was not presented by this and we broke it initially, I would 100% sell from this area. But since we still had not confirmed that we were looking to sell, I waited for entry confirmation off this area. And I'm going to show you what that entry confirmation was. So in a perfect world, my entry, if I'm not waiting for price to break past this area, we enter right here automatically. Like automatically, we would enter right here and it would look like this, right? We would wait for New York session to open. Boom, we hit take profit. Perfect, right? That's in a perfect world. But that's not what happened. What happened was we waited for price to break past this area right here. And then as soon as price broke past this area, we were presented with this right here. So let me go back. Price breaks past it right here with this wick. And then I want an entry confirmation off this zone. So what's my entry confirmation? This M5 supply that was created off of that new area. So we have an M5 supply, and then I go to M1. We have a M1 up here. Now I know this is a little bit of a stretch. It's not in confluence, but this is my entry confirmation. So I was comfortable taking a sell off of this area as an entry confirmation. So I sent the sell limit right here at 38782, looking like this. And then this is the problem when your entries are so damn precise. Sometimes they don't activate by a pip or two. And I actually call this in the Signal group, and the people that have been in there for a while, they adjust their entries. So over 40 people were able to catch this 1 to 4. But notice how it did not activate by a pip right here, literally by a pip. A lot of people got in, some people didn't get in, but you can see how precise these entries are. And then notice how that is where the volume comes off of. Price literally gave, you can see price would have given literally a 1 to 3 off of this area, 1 to 4 right here. Yeah, literally just a super solid trade. Now again, like I said, I did not want to take the trade off of this area up here just because of that area of demand was not broken past. It was actually respected. So if it would have broke past it, I definitely would have entered automatically here. But this was the entry confirmation right here. Okay, so you guys are seeing week after week, I do not change anything in my strategy. I just follow the same exact rules week after week, show up, and we obviously have something that works. And I give it to you guys for free. So all you have to do is study the material. Make sure you guys are liked, comment, and subscribe. And week after week, I will provide everything that you need to be profitable. Now, if you guys want to be part of the 16-week winning streak, which we're going for 17 weeks now, make sure to join the Signal group with the link down below. And yeah, I'll see you guys in the next one. Peace.